Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Tuesday, August 10th, 2010. This morning we're talking about what's ahead for the Fed. Today is the Fed interest rate policy meeting of the Fed Open Market Committee, and that's going to take place at 2:15 today Eastern Standard Time. Now they're expected to keep rates at an all-time low of 0.25%. Nobody's thinks they're going to make any moves on that, and they're also probably going to keep the language about keeping the rates there for an extended period of time. However, there is some speculation in the market that the Fed may try and act further and to go with some further quantitative easing. Now, what they may say today is that they're going to reinvest proceeds from mortgage bonds holdings into new securities. They could also announce further asset purchase plans. So people are starting to dub this as QE2, meaning quantitative easing 2. Now, they've done this the first time, and now we're still having some economic problems. Recovery's not taking place as they want. Unemployment rates have not improved, and the Fed seems to be very concerned about what's happening. So there's a lot of discrepancy about what's going to happen, whether if they announce, if they don't announce, which is going to be dollar positive, what's going to be dollar negative for the market. And to be honest with you, it's a little bit difficult to tell right now because there is some increased speculation in the market that they're not going to do any sort of quantitative easing, but they are going to announce economic frailty here in the U.S., which that could send the markets into panic mode, and that's what we're seeing this morning. I wouldn't say panic mode, but we're starting out the day in risk aversion. Just want to show you here on the chart. We're looking at Aussie USD. All right, we've got a little bit of pullback. Just show you here. I'm on the 2-hour chart. I'm just going to show you a quick Fibonacci retracement. Look at that. Looks like we're running right to that first level at 90.076, and we've got the first major retracement level of 38.2 at just about 89.91. Now, when I look at these charts on a longer-term time frame, let's go to the daily real quick. Okay, you can see that we still have some support here. Here's the 20-day moving average, and it looks like support's right around, 89.90. So we could be getting a pullback here in Aussie USD, potentially to that level, but if it breaks that, I would still suggest that perhaps that would be a buying opportunity, but we'll have to wait and see. Some other things we want to take a look at this morning. I just want to show you pound dollar real quick. Identified yesterday 160 as a potential high. Now in the UK, they came in with lower housing prices for the first time in about a year. So they're coming out with their the Bank of England's coming out with their inflation report on I believe it's Wednesday. And what this is going to show is whether or not inflation has fallen back to within the target band. Now, inflation in the UK has been outside of the band, leading some to believe that they may have to return to normalized policy. However, if this new home price deal is the start of a new trend, then perhaps prices will begin falling in the UK, and they may not go back to policy. All right, that could set up for a weaker pound going forward. So right now we've got risk aversion. Just want to show you Loonie is also lower here. Let's look at it on the 2-hour chart again. Oh, come with me. The Loonie is, as you can see, it's been weak against the dollar strength right here. And we've got oil prices now that have fallen back to about $80 a barrel on a sign of global economic slowdown. So we're going to have to see what happens, but it's also due to risk aversion. And lastly, I just wanted to show you dollar yen. We've got dollar strength versus the yen. In Japan, they had their interest rate policy meeting last night, and they left rates unchanged, which is no surprise to anybody. However, the government assessment of the economy said that it was improving despite a higher yen. So this has reduced the speculation that they're going to have to do some form of easing and/or intervention. So we're seeing yen strength across the board. We had the Nikkei down overnight. China reported that they had lower than expected exports, and that home prices they still continue to rise, but that rise slowed a little bit. So that's what we're looking at in the market. But basically, all eyes are on the Fed today. we've got the meeting here at 2:15, and they're talking about, well, if they have to do further easing, what's going to happen. And one of the problems that we have is that it's not that money isn't cheap enough. I mean, money is real cheap. It's just that there's a lack of demand for it right now. I mean, people are still very fearful about the direction this country is going, about the economy, about all the debt we've taken on, about employment levels. And, let's face it, if you're not certain if you're going to keep your job, it's not a very prudent move to go out and borrow money regardless of how cheap it is. Maybe if they came out with something that said, well, if you lose the money, don't worry about it, people might be inclined to borrow and buy. But at the end of the day, this all falls back into the extend and pretend policies that we're talking about. So, people are starting to call this Japan 2.0, and this situation basically happened in Japan. They had something called the lost decade, where they've been battling deflation for 10 or 15 years, and the Bank of Japan pumped all this money into the banking system there to shore it up and to get people borrowing, but nobody borrowed money. They said, you know what, we're content with what we have, and the situation may be the same here in the U.S. I mean, how many flat screen TVs can you own? If you don't own a house right now, it's probably because either A, you can't afford one, or B, you're out of the house that you previously bought that's now underwater, or what happened. So, a problem here isn't that money's cheap. Problem is that people are fearful of the economy. People are also afraid that prices still may be high and need to come down. So, this may be a situation where if we do get excess liquidity pumped into the system, that we may see stocks and commodities rebound, risk currencies rebound, but major asset purchases like houses and cars could continue to decline. And I mentioned earlier in one of the blogs, I don't know, about a month or two ago, something called biflation, and that's something that we could see where we have commodity price inflation and asset price deflation. So we're gonna have to see how this plays out. But at 2:15 today, just know that there is going to be major volatility surrounding this announcement, and it's the kind of thing where it's going to go on for a little bit of time as the statements trickle out and as people sort of analyze what each statement means. So, especially this meeting as well, this could be a big one. So, I'm going to sit on the sidelines going into this meeting, and I'm going to kind of wait for the dust to settle, see what happens before making any decisions. For our traders out there, I would advise you do the same. So, that's what we have today. All eyes on the FOMC 2:15. Good luck and good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.